Welcome back to Stocklabs, another market recap. We're already coming into the final week of February. And for the preceding week, it was okay. Actually, wasn't that great, but like the NASDAQ was going down Tuesday, Wednesday, and then we had NVIDIA earnings, which were, I guess, good enough. Everything blasted off again on Thursday, gave a little bit back or kind of just hung around flat on Friday. And so everything looks green for the week, even though there was only really one kind of day that was up, but it was a big up day. So that's life. That's how it goes. So S&P was up 1.8%. Qs were up 1.5%. Dow was up 1.4%. IWM was actually down 0.8 for the week, so not really any participation from smaller cap stocks. Actually, that's been a pattern for a little while, at least for the last several weeks. We've just seen higher market cap stocks doing well, and the rest not doing too great. Gold was also up 1.2%. Bonds up 1.2%. Oil was down, and yeah, that's really it. So, on the surface here, like this, it looks like everything was all hunky-dory for the week, but the intra-week action was actually much choppier, spotty than what you're seeing here. So our mega cap stocks, they all did, for the most part, pretty well, with the exception of Tesla. Tesla was down 4%, but like I mentioned, NVIDIA was up big on Thursday, up 9% for the week. Amazon was up 3%, Google up 2.5%, Meta 2.25%, Microsoft up 1.6%, Apple up 0.2%. Apple has kind of really been struggling the last, even not just couple weeks, but last couple months. Kind of, it seems like it's on a somewhat downward trajectory, at least from a stock perspective. So see if that keeps up or what. But down 5% for the year. Apple hasn't really found itself in this position very often. So yeah, that's that. NVIDIA up 60% already for the year. Probably if your portfolio is full of that, you kind of already made your year. So congrats. If we look at breadth by industry, like I mentioned, there wasn't a whole lot going on in the overall market. So this is kind of skewing to the negative side. Utilities were flat. Industrials were 0.4. Financials 0.2 flat. Tech was down a pretty decent amount, 2% on a median basis. So, that's a pretty big deviation from what the NASDAQ did. So it wasn't really a lot of broad technology participation. Services down 0.6. Healthcare down 0.8. And basic materials and consumer both down 50 basis points. So not that much to be worried about. Upside, subsector breadth, there's not really anything here that's up over 5%. So you're not really seeing any pockets of big strength aside for some of those individual tickers like the mega and terra cap tech stocks. On the downside, we have a couple, but nothing that unfamiliar. So EVs and other tag-along EV businesses, really bad week. Tesla's had a bad year. These stocks really fell out of favor going back several months. Going back, toward the end of 2023, but really once 2024 started, they just started dumping like wholesale. Like no price is too low for you to sell your EV shares. So we'll see if any of that stabilizes or if it's kind of just foreshadowing something worse to come. I don't know. But people tend to know things before they materialize in something official. But Yeah, we'll see. If we look at breadth by market cap, 1 to 5 billion cap stocks down 1%, so pretty poor showing, kind of in line with the Russell or worse. 5 to 10 billion, flattish, up 11 basis points. 10 to 50 billion, okay, now there's some real performance, up 1.2%. 50 to 100 billion, up 1.3%. And TerraCaps, 100 billion plus market caps, up 1.3%. So from 10 billion and up, stocks were good. Under that, they were bad. So sometimes it is, a little bit simpler to just cut the market in these type of sections, because you can see that money is coming into the market, but only in certain areas. So it's not like it's some big risk on. I mean, market is risk on means like at all-time highs, but it's not like risk on like it's small spec stocks that are the ones running. It's just like kind of big stable companies are just attracting more money, and indexes going higher because of it. So that seems to be the pattern that has persisted going back even a couple of years. I mean, it takes breaks sometimes, but that's really the mode that the market's always in. So if we look at intelligence for the coming week, it's kind of barren. We've got miners bullish, bear China is bullish, semiconductors are bullish. So, we'll see. I'd like to see more stuff on here in general, but it's not there, then there's nothing to really say about it. So on the downside, we've got coin, bear. Yeah, this is leveraged coin bearish. Natty gas, bearish. Natural gas has been getting absolutely killed. I don't know what low this is, like time frame wise. I mean, it's past like 52-week lows. It's probably like 2-year lows or more for natural gas. So Stocklabs says, trend is going to continue for this week. So we'll see. We got oil and gas bearish. Bear Nvidia is bearish, so bullish Nvidia, and bear Russell is bearish, bullish Russell. If we look at our oscillator for overall market, it's kind of didn't really do anything this past week. There was kind of a big range, at least in the NASDAQ, due to the sort of trading down early in the week and then trading so high on Thursday. But overall, we haven't really gotten anywhere. It's not getting any more overbought. It's not really approaching oversold at all. So Stocklabs is kind of comfortable with where the market is as far as like, the price action more or less being normal. And we'll see how it goes. I mean, most likely the month is going to probably close decent. Maybe Monday, Tuesday, there's some little bit of consolidation or some give back, but I would expect February to close on the highs and go into March from there. So that's all from me. Hope you guys have a good week out there, and talk to you next time. Bye.